Right, so welcome to the India Market Review by Bangalore Investors Club. This is Dr. Musa. This is Friday evening, 11th of September 2015, and we are discussing what's happened in the markets this week and what could possibly happen next week, right? So before jumping in, any big um, events that have happened in the before you look at the charts, that is, any big events that have happened in the world so far is perhaps the Brazil downgrade by rating agencies, right? And the very next day after that happened, the Brazilian ETFs actually fell by 4.5% just on that news, and there was really no recovery after that. And ever since this has happened, this has brought in to sharp attention the status of the BRIC countries, right? So as we know, that's Brazil, Russia, India, China, and South Africa, right? So there has been this questions that are now being asked about the health of the BRIC countries, the emerging markets, and whether emerging markets are actually as healthy and as resilient as people make them to believe. The issue, however, that so there's one more. If you've been listening to the debates on the financial networks, then it's like, okay, are we looking at uh, a sort of slowing down of the BRICS economies globally, or is this something specific which is unique to Brazil? And what should we, do about all these things? So, well, there's no, I guess, easy answer as always. But one of the things that's been emerging from the discussions is whether the emerging markets itself should now get divided into different sets of sub markets. And somebody actually made a very pertinent point in one of these debates, saying that if you look at China, uh, it's 10 trillion dollar economy, uh, right? Not in terms of GDP, but in terms of various other things, and things like India, Russia, and the rest uh, are generally what 1 trillion, sorry, $2 trillion, right? So yeah, sorry, this was GDP. So $10 trillion economy, China, India, Russia, each, right? Uh, and giving a perspective as to how different China is in terms of its size and its impact compared to rest of the emerging market economies. And there was also this further debate which happened which is ongoing right now, which is should we look at export driven economies uh, and domestic uh, economies like India separately, right? And well, of course, there's never an easy answer to any of these questions. But with the global slowdown, with the China slowdown, any export-oriented economy has definitely been hit a lot more than a country which has been more inward-looking. And Brazil has been one of those, export-oriented economies, while India is actually not so. So it's becoming pretty murky now that not only with the China slowing down, we have Brazil now being downgraded to junk status, that too, right? Um, so what does it say about the rest of the world, about things that we're taking for granted and saying these are the growth engines of the world? And apart from China, if the rest of the growth engines are also slowing down, then what does this maybe tell about the future? So one more added what shall we say, element of negativity which has arrived in the system since we spoke last week, and something to keep note of. Having said that, of course, our Indian markets have gone up, and that's also on the back of the US markets going up a little bit. And then the question really is this correction of an ongoing downtrend, or has a bottom been put in place, right? And therefore, the question for the IMR is, do we short the bounce, or is it time to go long, right? So that's really the question that we want to answer today. Apart from the Brazil thing, really nothing else has changed from the negative to, let's say, if you want to be a little optimistic, lack of positive outlook rather for the next 2-3 months. If there is maybe something else to it, it is the migration slash refugee status, refugee inflow into Europe. And something we had discussed in the Wealth Lab, actually, even before it hit the news channels, is the fundamental reason why some of these economies might actually be welcoming a lot of these refugees. And the simple reason is employment. And even the head of Daimler Chrysler, manufacturers of Mercedes-Benz, has gone on record to say that these are exactly the sort of people who we would like. They're industrious, they're hardworking, they're willing to take the jobs which we find people difficult to find in our domestic economy, and most importantly, they're getting young people into the economy. If you talk about Germany, you're talking about they're prepared to take 500,000 people for the next several years. We have to think about a simple fact that you're talking about, let us say, even over 10 years, 500,000 people is per year is 5 million people over 10 years. And if you say, even at, just to keep things simple, 5 people to a family, you need 1 million houses, maybe a 250,000 or 500,000 cars to be produced, everything that goes with it. Plus, these people are bringing a lot of young people who would otherwise not be available in the economy. So, in a sense, the economic disadvantage that Europe has could be getting fixed by a large measure by this inflow. And this has really important consequences for the multi-year, multi-decade future of Europe. Those questions are probably not being addressed in the public arena right now, but this is a very, very interesting phenomenon that is going on, and that is not likely to end in the near future, right? So that is something to keep in mind in the European thing, that this is not really such a bad thing for Europe, and it might actually be a long-term positive. Of course, added to that is the surprising amount of welcome that these emigres have had when they have arrived at the doorstep of Europe. That's really fascinating. I really doubt whether we would have done it, and all that, right? Okay, so that's the other major event. Right. So those are the two things. Apart from that, I think economy-wise, really nothing else has changed. And with that, let's jump into our IMR. So let's start with Vidya's data. Very useful, as we have seen, and things working on almost like clockwork when it comes to uh, what options analysis can do. So if we I'll just keep it simple and focus on the percentages. Okay, right. So if you look at in the last 3 days, the okay, let me bring up Notepad. All right. Right. So 3 days back, you can see we're looking at index futures, and the people who are basically long were the FIIs, and the people who were short were basically individual retail guys, and we all know what happened during the week, right? That hasn't really changed, and even now on Friday, today's data, we can see that the index futures are aggressively long by the FIIs, and they're also short, but net quite positive, quite long on the index futures. The FIIs, the clients are net short, right? On the when we come to the stock futures, so if you look at 3 days back on the stock futures, the FIIs and the DIIs are aggressively short versus the individual clients are the ones who are long on stock futures. And if you look at the situation today, it really hasn't changed much. The stock futures being long by clients, and the institutions are clearly shorting the stock futures. So this trend continues of shorting stock futures versus going long on the index futures by the FIIs. If I might just put out a thing to Vidya, I think we're seeing this for 3 weeks. If we could maybe at some point get together and look at the value analysis. So the percentage now, and I know that we've tried this, but we've never really been able to get a sense of the amount of money that is there, right? We know that these are, I think, open interest. I don't think it is amount of rupees, right? Both in terms of the index and the stock futures. But if you can try and figure out amount the money that we are talking about, then maybe we could play off one versus the other and get maybe some more insight. Something just thought. All right. So if we now look at the option side and we go 4 days back, then you can see that on the option side, the FIIs are long on the puts, very aggressive. 61% of the puts longs are the FIIs, and those who are writing the puts are again the um, mm, individuals and proprietary traders. And as far as the calls are concerned, the calls put and short more or less balanced on the FI side. The calls domestic having some amount of 10% they are long, but if you have to get a clear picture, it's clear that the FIIs are short on the long on the puts, which means they have a bearish view, plus the individuals are the ones who are writing the puts, right? If you come to today's picture, more or less the same from 3 days back. FIIs are long on the puts, 60%. FIs are both writing and going long on the calls, so that sort of cancels out. But what is clear is FIs are long on the puts, which means they're bearish, and again the individuals who are writing the puts. So going into the next week, we're looking at overall a bearish view as far as index options are concerned. And of course, when it comes to stock options, we've kept saying that really nothing much to say. FIs not major participants in this space, and it's basically individuals who are whether it's calls or puts or long or short. Essentially, it's the individuals versus individuals that you are seeing here. So not much to be made out. Very interestingly, if you look at the put side, 11% longs, puts 11% short, puts exactly cancels off almost. Right, of course, may not be in terms of rupees, but in terms of open interest. And again, if you look at the calls, long 8%, short 9%, almost equal. So futures options, not much to say, but if you look at all the other data, we can clearly say that the FIs are short, and it's the individuals who are let's say bullish to neutral, right? Now coming to the um, option pain chart. Not everybody may get it, but should be clear enough, I hope. So let's start. So this is 7th September, this whole week, and you can see that there's a massive wall of calls which are there, puts rather less compared to the calls, and if you just keep going, not much change actually this week, right? So just to play this again, go back to all, right? So this is the 7th, and then really not much change. This is the 8th, really nothing much has changed. Neither has the central line, which is where the option pain is, which at I would think it's at 7,900. Yeah, right. Really not there. So this is where the option pain is, not changed at all, and equally uh, uh, you know, really not much change. Very slight changes in the sizes of the puts and the calls, right? Kundu is adding that in the chat. Proprietary traders are also very smart like FIs, so that data clearly come to the same conclusion. All right, okay. Generally, the reason I don't look at the proprietary traders with as much attention as the FIs is because of the relative size. I agree with you that they are smart, the prop guys, but the FIs just in terms of size are huge. All right, and then coming to our change in OI data over the last week. Well, let's see. When it comes to the put side, so we're looking at mm, not much of a change actually, right? As a matter of fact, the 8,000 puts have come down, right? Reduced, and so 8,000, 7,900, not much of a support. 7,800 come down a little bit, right? Not terribly there. It's about 7,700 has increased quite a lot, but again, 7.6 has also increased, and increasing 7.5 has decreased in the puts. So 7.7, 7.6, the one which are almost at the money, puts have increased quite substantially, but the 7.5 has come down. So I guess some minor support at 7.776, but the strongest one is really at 7.5. Of course, we are not there on the market, but that's where the strength is by almost double, right? So if you look at the y-axis, you've got whatever 25, 30 here, but here you've got 45, and that's where the biggest support is. So that's interesting. There's been a build, there's been a decrease in 8,000, decrease slightly in 7.9, slightly in 7.8. So those supports sort of giving away. The writers definitely winding down their positions, but some build up on 7.7, 7.6, and 7.5. It'll be really interesting to watch that, right? And then on the call side, big build up in the 8,000 call, right? So this is all the Nifty. Big build up in 8,000 call today, especially. And then 7-8 call built up about 2-3 days back, but hasn't changed much. 7,900 hasn't changed much. And this is the biggest one is of course 8.5, which is unlikely to get broken out in the short term. So if you remember about from I think 2 weeks back, not a week back, the FI picture, sorry, this OI change picture was very different, and now you're seeing a sort of stability in the OIs relative to how it was 2 weeks back. You saw 2 weeks back, there was a steep build up at the far out of the money put options and the far out of the money call options, and there was this sort of curve, if I might put it this way, if you can just follow the tracker which is there. which you're not seeing now. You're seeing this adjustment, more or less sort of fine tuning, but nothing very significant, except I would say for the 8,000 call build up today, right? So not much, and I think that's again shown in the OI picture that we saw earlier, where really nothing has changed from the last 1 week, right? So FII wise, sorry, option derivative data wise, really nothing much to look at or say has or has not happened, right? Okay, so that is on the um, yeah, derivative analysis. So now let me just close off all that so easier in the system, right? So to jump into now the charts, right? So if you look at the Nifty, we've had this bounce today, and this bounce has also actually given us a filled green candle, which means over the day it's actually been bearish and just closed a little bit in the positive. So that's why we have the green part to it. But overall, the opening has been sold into through the day, and really not much strength which is there towards the end of the day, right? And if you look at the move from 7.5 to 7.5 to 7.850 almost, and look at the volumes have, as you can very clearly see, been quite poor. There is, having said that, one small note you may want to keep a track on, which is a potential MACD crossover that could happen here. And if that happens, whether we actually see more strength in the market or uh, developing. But at this point, I think that's looking quite unlikely. You also saw a strong build up in the 8,000 call today as the market went up. And 7.5 for now remains a strong support. So looks like 7.850, right? That's this level, 7.850 for resistance, and 7.500 for support is where we are likely to be. So between, I would say, 8,000 on top actually, and 7.500 is where the market could stay for the coming couple of weeks. Again, remember, really no positive or negative triggers, no positive triggers for sure. If anything, maybe some negative triggers because of the FII thing. And of course, there was, oh yeah, how did I forget? There was a sentiment issue, all right? Issue with the PM urging industry to take risk and invest. There was also the, the FM saying that tax breaks for industry will gradually be removed, right? I'm not sure what the timeline is and the roadmap is, but that's something to keep in mind. So tax breaks going, and the PM just saying, take risks, etc. But really, nothing is going to come out of that, in my opinion. Uh, and till the uncertainties of the coming events go out, there's really nothing much to look forward to. So what are we talking about? As we spoke about last time, and Vidya is also pointing out, we're talking about the Fed on 17th, and we're talking about RBI on 29th. But if FBI is the Fed is the big thing, of course, and then quarterly results thereafter, right? So that's what we need to basically look at. And of course, there's the Bihar elections, right? So I think that's on the 8th of November, if I'm not wrong, right? And that's going to set the tone for probably the rest of the year. Okay, so with that, let's jump into the chart. So like I already said, Nifty, not much. I think good strategy would be perhaps to look at this point We are in the middle of the week and we've got exactly 2 weeks to expiry now. And this is why I keep sometimes when I remember this, say we should perhaps do this IMR one day earlier or maybe on Friday morning. Of course, we would not know Friday's data, and I'm just talking about writing options because we now have lost the time value decay over this weekend. So 8,000 and the 8,000 call, 7,500 put could probably be the options that you want to write, expecting that we are not probably going anywhere. And remember that the option pain is at 7,900. Writing the put is slightly risky, not slightly, quite risky. Something could just go wrong, very unlikely something could go very right. So writing the 8,000 or 8,100 call might actually be something worth looking at. And just to bring that into perspective, into looking at how much might we get, let's quickly have a look at the equity derivatives. Sorry, live market, equity derivatives, and we're looking at the Nifty. So if we look at the 8,000 call, you're talking about 60 rupees even now, or even the 8,100, you're talking about the 36 rupees even now. And remember, we have to multiply this by 25. Today morning would have been definitely be a little more expensive. 36 into 25 is 900 bucks that you could earn per lot technically. So anything between 900 to 1500, I think one could earn. And those are the things that you should look at. Of course, writing the 7.5 put, which is at 69, you could do that and it'll get you money. But the risk that suddenly something wrong happens and the market just comes down. Something suddenly good happening and the market going up, that's usually far lower of a chance. But something bad happening and the put suddenly blowing up in your face, that's something there. And that's also reflected in the implied volatilities. They're all in 30% plus on the put side, but on the call side, you can see they're all in the 22% range, right? So quite consistent as a matter of fact. Very smooth IVs on calls, puts changing from 32 to 29, but again there, right? And there's one real cheap put here at 15%, which is definitely a question of demand supply. One of those odd things where not much trading happens. You can see a very odd, very low OI there, right? Okay, so anyhow, writing calls, writing puts out of the money could be the strategy going forward for the next 2 weeks. So think about that, and let's look at individual sectors now. So we've got the bank Nifty more or less showing the same picture as the Nifty itself. Really no change in the bank Nifty, quite negative. The gaps which are there on the Nifty and the bank Nifty are still very much there, right? So, yep. So that's with the bank Nifty, and then okay, it's so BSE Auto, right? I think we're going to see more or less the same thing. The bounce there, MACD potential crossover, but not much. And here you can see that we have a red candle, went to the 21-day moving average and then cooled off from there. This is the consumer durables, okay? And on the consumer durables again, actually on this you can see that there's been no recovery. As a matter of fact, it's just kept falling. There's of course this big hammer, but really nothing. And this actually showing more weakness than many of the other sectors we have looked at. So maybe not such a good Diwali in the coming uh, month. Who knows, right? Bad monsoon, not much of growth in the market. Be interesting. Capital goods, all right. So same story comes up, but really not able to go up, and we actually have a red candle on the capital goods space today, right? Okay, and then FMCG. So Doji. So again, move up, really not convincing at all. We need to definitely look for further strength. Healthcare. So last 2 days, good green candles with long lower, tails. But today again, just sat there at the 50-day, sorry, at the 100-day exponential moving average and just has taken a pause there, showing some strength, but not enough, in my opinion, to warrant buying. Okay, and what you can see here is a shooting star and a hanging man, shooting star, hanging man, shooting star, hanging man. So that's there. Then you have the IT index. We'll look at the CNX IT later. BSE metals. So we were talking about the crossover on the metal space, and we are seeing, let's put it there. Slightly higher bottoms. We still haven't got a higher close though. And today has been a pretty bad day. Of course, there was this government announcement of some um, additional customs duty on imported metal products, I think, which is a relief for the Indian industry. Sort of a symmetrical triangle, we could say, but let it decide which way it wants to go, and then we can take a call. But in the meantime, the MACD showing strength. It's actually done, like we said, it's come to its lowest levels for the last 3 years and could be a place of support. We're also seeing a tentative double bottom with a possible place for it to recover from. Okay, and then mid caps, good recovery, definitely BSE mid cap, but whether this will sustain or not, better to wait and watch. And now testing the 200-day moving average. Okay. Okay. PSUs, BSE PSU index, uh, quite miserable, I would say. Okay. Realty, right. So this is one place where this gap has consistently been closed. It's maintaining a higher high, as you can see. So today, green candle, higher high, MACD again doing a positive crossover. So some amount of strength definitely appearing in the realty index. You've got a sort of triple bottom actually, and what I'm referring to is here, or maybe even a quadruple bottom. Quite interesting. Really interesting to watch whether this level, very specific level actually, uh, right, whether that gets held or it doesn't. And we are talking about 1210 on the BSE Realty Index, and hopefully that holds, right? So we're talking about multi-year lows here, could be, basing out, forming a long-term support. All right, so let's put that for our reference in the future. Okay. So that was perhaps a capitulation move in mid-August, and from here things may not get much worse for this. Let's see. Small cap index showing some strength. Let's jump to CNX IT. Right, so that again not doing anything. Got a potential. High, and we will watch out for this. So IT more or less going sideways. Nifty Junior, more or less the same picture as the Nifty itself, has fallen, double top, etc. Low volumes, so leave that. Energy, so CNX Energy, are we having a bottom here? Too early to say. That's a level you want to watch out for. And I think that is a sort of multi-year. So it broke down from this multi-year support of 7,475, and right now one would say that it probably go lower, but if it maintains 7.3 on the way back down and then it's able to go back up, then we probably have a support that has been established. We'll just keep this trend line here to watch which way this might evolve. So a descending triangle, if one wants to call that, would have to agree with it, and we'll see which way it breaks out or breaks down. A breakout would warrant a buy with about a 5% upside move that we're talking about individual CNX Energy stocks, since the index itself cannot be traded. Okay. CNX Infra actually made a lower low but had a bullish engulfing pattern. Right. Very bad volumes. Next Pharma. All right. So really nothing in the CNX indices either. PSU Bank, of course, I should remember to do that separately from Bank Nifty. Some strength, it'd be interesting to watch. Not really a tweezer stop, but that would be a level to think watch out for. All right, so if that level breaks on the PSU Bank, then perhaps buy. But the way all these bounces have happened on really poor volumes, really not something to look forward to buying longs. So that was BSE Realty, CNX Realty, showing more or less the same picture, right? And this one actually showing nice triple bottoms here, 1, 2, and third. And Doe theory very clearly says, if you remember, that triple bottoms seldom fail, right? Okay. So definitely showing some strength. All right, I think that is it for on the CNX side. Yep. So let me just quickly make some notes. Realty space showing strength. All others up move on poor volumes and also iffy candle stick patterns. All right. Okay. Just want to check up CNX power. Where is power? Hey, did we see metals? Right. So, yeah. So power was showing strength earlier, but somehow doesn't seem to be holding on to that. So earlier you're talking about infra power, realty and metals. I think now it's really come down to realty and metals where there is more strength, and we really need to be focusing on that if you're looking at going longs in the days ahead. Probably not good to short these two sectors, but everything else I think is shortable. All right, okay. So with that, don't know why I'm having this peculiar problem with ACC. Chart always comes in some wonkified. All right. So look at the Nifty stocks today and reviewing what we saw last time. You can see that ACC definitely in a firm downtrend, and it's been able to hold the lows of 1315. Overall still weak, but technically is definitely getting stronger, right? And not no bullish divergence, but definitely getting stronger. And in case it is able to hold this 1350 levels, then good. Remember one thing, monsoons as they recede, construction activity picks up, and that's the phase we are in right now. And the cement stocks could see an uptick in sales, and that could be a reason for them to move up. And we actually came to almost the low highs of the 2007 peak, so it's like a test of this level. Just going to mark it in a different color for future reference, right? So we didn't come there, but close enough. And if that level breaks above 1400, then could be looking at a buying opportunity on ACC, right? So all right, okay, so that's where ACC is. and then Ambuja. All right, so very interesting. Big uptick in. Look at the volume. Sorry, not much change in volumes in ACC, but Ambuja had one huge volume change 3 weeks back. I'm wondering whether you're seeing this sort of volume after many months, almost 2 years. Something interesting going on, that's for sure. Wonder what it is. Don't have an answer. And you definitely have a big fall today, and can't really say volume wise didn't really add up, but this could be uh, and probably is a symmetrical triangle, right? Okay, symmetrical triangle there. Base is quite handsome, 10%. So 20 rupees breakout or breakdown. Watch for that. The way it has gone down today, you'd expect a breakdown on Monday morning, and we're talking about say 208 minus 20. We're talking about 188. Where does that take it? Uh, let's put that here, about somewhere there. Okay, and if you look at the levels in the past for this, we can see that it's had some multiple points on 88, 190 in 2013, 2014. All right, so could it break down? Yeah, but the level to watch will be a breakdown below 205 and then a break below 186. If that doesn't happen, then 188 obviously is not going to happen, right? So that is something to look forward to. So there's probably um, um, a good shorting opportunity if the market corrects in the week ahead, right? Miss something. CNX Realty, Vidya says advanced decline is 7 is to 3, and CNX Metal advanced decline is 4 is to 9. So, well, the realty space again. Is this Vidya week to week, or is this day to day advanced decline you're talking about? Today's data? All right, great. So today's data in a falling market, realty actually doing quite well. This is sort of data that really adds confidence, and 7 is to 3. So, going long on the realty side, but ideally we'd have a trend of this, something we'll definitely look forward to working on, right? Okay, thank you for that. All right. So Ultratech, while we are at cements, you can see that could be coming there to test that level. So it'll be good to watch. Good uptick here in volumes, and now I think very iffy. MACD doing a crossover, indicator showing some strength on cement, and really not much very far from its life high. Very nice double top on that. So looks like this level of uh, 2835 has turned out to be a pretty good support, and one could consider going long on this with a very nice stop loss below 2750. If it comes down to about 2850 would be a good place to buy, even 2900. um, it has to of course break through that downtrend line and the moving averages. Once it's clear through that, then back to higher levels. Asian Paints, okay, held the 200-day moving average there. Okay, Little iffy right now. Would be good to buy above 940 and short below 780. Till then, sorry, 840, long above 840 and short below 780. Till then, probably better to just wait and watch. All right. Axis Bank. So Bank Nifty not showing much strength. This one, a lot of volume happening. So somebody's obviously buying. Could be accumulation going on. You can see that on this level where the nice bullish engulfing was. You actually had higher volume, but has gone up. The volumes have really not built up, and I would say going long, wait till it breaks 505, 506 on the lower end, maybe buy it around 460, 465. As a matter of fact, if it goes to 500, maybe a good place to short. The only good support here is at around 420, and it hasn't come there yet. And well, RBI, in spite of the persistent rumors, did not come out with any rate cut, so we'll just have to wait and watch. Bharti Airtel, well, going sideways, you can clearly see 340 would be the place to short. Sorry, perhaps even, is it showing any strength? Ah, MACD crossover happening, but still in the negative zone. So some move down possibly. I think 370, 340 range bound. Wait and watch, and then we'll continue. You can see that the 2-year uptrend has clearly been broken. Would be far more comfortable if it is able to regain that uptrend by going above this trend line and sitting on top of 375, and that will be a good time to buy. Till then, stay away. Maybe a good time to sell the 380 call, 370 call. VHEL, some buy ratings coming out on VHEL, by the way, right? And very interesting, very interesting. Look at the support level, right? This is a multi-year support you're talking about, and simply for that reason, it's bounced from there. And let's look at the volume. Not great, but sure, we've got to consider that this support might hold, and the more supports that we might see holding like this, we'd have to, consider what our view on the market could be in the weeks ahead. And while we are still overall bearish, but if supports are going to hold, then we're going to have to review that bearish outlook. So around 200, 205 could be a good buy. 225, 227 clearly good resistance. And then problem obviously is that since moving averages are very lagging in nature, by the time it breaks these moving averages, it would have moved up substantially. And remember here, 240, 245, and then here 250. There's a whole bunch of moving average resistances which are there. I hope you can see them on your side. Should be able to see them. And 250 clearly good resistance, and would have to be very patient till it breaks out of that. Once it breaks 250, then 280 could happen very, very quickly. BPCL so started to move up, and interestingly, green candle today. All right, again, double bottom, right, on BPCL. Downtrend line, this one, let's make it from there better. That downtrend line has tentatively been broken today, right? So not saying we are in an uptrend, but downtrend line clearly broken out, dealing with multiple resistances between 850 and 870. And once it goes beyond 900, then we are at definitely much, much higher levels, right? Okay. Coal India. It's come to a very important support, and a bullish divergence in Coal India. Right. So what does Coal India do from here is going to be a very, very interesting um, thing to watch. Unlike the rest of the market, which has bounced back up in the during the week, this actually has not shown any strength at all, right? And it could be a great shot, or it could be a great opportunity to buy. Looks like, I would say, at this point it's a very difficult call to make, but given the overall behavior of the stock in the last 1 week, I would say one should be shorting it. Stop loss above 344, 345, and the target is 320. But in steps of 5 rupees, you've got a lot of support here from the past in this cluster zone, right? But 320 is quite possible. If the market corrects, then this is definitely a short you want to look at, right? Short if market corrects. ITC. All right, 1 second. Long stocks. Ultra Tech. ITC. Well, no call. Best would be to write options on this 300 put and the 330 call, or the 320 call and the, yeah, I think 300 put and the 330 call. May not make a lot of money, but save ones to write. While we are at it, why don't we just have a quick look at ITC. So we were talking about 325, 300. So 325 or 330, you can see, is the highest OI. Okay. And you'd get about 2000 rupees for that. Not bad at all. And then at the lower end of about, let's say, 305, 300, strongest OI is at 420, 420,000, and that's 240, right? So, one of the two, you are both, is something you could look at writing. That's about 2000 each on each lot that you could earn if all in all it goes. And this is new that NSE has included this 4.7 lakhs OI, and on the call side, and only 2 lakhs OI on the put side, right? So total OI. This is not used to not be there before, noticing it for the first time. Okay. Vidya, that gives us an idea whether just tracking this total. Of course, we could have done it before also, and seeing how this changes with the put call ratio for each stock over a period of time might give us some insight into that, right? Okay. So ITC, sell call, sell puts. Then Kotak Bank, up on lower volumes. Watch 650 could be a good resistance, right? Good place to short if the market doesn't show strength. So around 345, 350 short. The stop loss on 355, sorry, 650, 655, and then a target stop, down below at 620, maybe even 600, right? If the market comes down. Okay, L&T, capital goods space, a lot of selling, some buying, 1500 psychological mark, and I think yeah, a multi-year 2011 and even 2008. So multi-year, I'm going to put that in a different color, right? Multi-year support, excellent place for a bounce, as it did from 1500 went to 1620. Right now, small bit of a correction. I don't think 1500 is going to break down, right? So let me put that. Okay. Then Lupin. Okay. I would say just wait and watch. Let it decide with what it wants to do, and then we can take a call on this. All right. M&M. 1100, good support, and 1100 was wow, not a multi-year support, but double bottom nevertheless, right, where it had taken support before, and now it's created a double bottom at 1100. Their new vehicle TUV 300 has been released, I think yesterday, day before, and it's one of those very few vehicles under 10 lakhs with diesel and AMT. All right, so this could be a big money spinner for M&M. So we'll have to wait and watch and see that. And very good resistance at 1250, 1260. Go buy with a stop loss below 1145, 1146 with a target of 1250, 1260 on M&M. Right. Maruti, well, this is showing strength again, isn't it? Right. Really didn't break down below the 4,000 mark. Hasn't gone down like the other stocks, and today moved up very nicely. The 100-day moving average is showing really some good support, and likely to go back to 4450, 4650, and definitely should not be shorted. If anything, look to buy on dips, and if in case the market does correct in the future, don't short Maruti. Let it just settle down and then buy it later. All right. NMDC, so that's, well, clearly broken down of this downtrend and has definitely an tentative uptrend in place, higher tops, higher bottoms for sure, and tentative higher tops is also what I would say. See this getting picked up on good volumes. So this was a very negative stock. Actually, fundamentals I don't think have changed, but well, somebody is buying, and once it clears, well, it's now at that 100 rupee thing and dancing around that 100, what to do, what not to do. Uh, I would say metal space showing some something in the government side to help that space and all. Just taking a sort of contrarian, almost fundamental call um, of saying perhaps one could consider buying this. Put a stop loss below 95, be very patient, could go to 110, and then we would review. Right? Somebody and some people are definitely picking it up at lower prices. NTPC, if I'm not wrong, there's some FPO that's supposed to happen on NTPC. I'm not sure how that's going to pan out. So this is at multi-year support. Look at this. So more and more stocks at multi-year support. That's interesting. Sort of a double bottom there. If it comes to 115, 114, could definitely be a good place to consider buying. Stop loss below 110, 109. First target 125, 127, right? So ONGC, this is interesting. Has the fall stopped for this? Went from 450 to 230 and it's come to a multi-year support level. Sharp traders could consider going long on this with a stop loss below 220 and first target 235, 240. Definitely get out if you're a trader, and then we will watch. This is a descending triangle. And we'll have to wait and watch as to which way it goes. MACD wise looks like it's going to break out. The indicators wise looks like it's going to break out, so suggesting trading buy on this with a stop loss below 220, 218, first target 240, and if 240 can hold then definitely 250, 255. Surprising, surprising, surprising. Punjab National Bank, I would say stay away from it. A lot of dojis, no clear decision about what it wants to do. Good buy would be only above 145, 150, or 125 could be a good shot. Should look at option writing here, not really looking at anything else. Power grid, wow, as usual, tends to be very volatile. It's come to multi-year support, so 2009. A lot of stocks at multi-year supports, as you can see. So in a sense, question to be asked is perhaps a bounce should have been expected, to be expected. Maybe a bounce is there because some of the stocks haven't really bounced yet. But as they do that, then we will get perhaps higher levels, and then we could again have the fall. Reliance, well, so that seems to have now made sure that 820 is not going to get broken. This is right. So Reliance, their geo launch getting closer and closer and closer. So double bottom at around 825, and 870, 875 breaks, then easily 900, 910 very quickly. Anybody willing to take the risk and stick their neck out should go long on RIL. The lower it comes to 825, the nicer it will be actually to buy it. It's actually gone from 820 to 870, 50 bucks, almost 8% in just 2 days. Looks like it's just consolidating here. Think of it like a miniature flag actually, 2 days, and could actually just break out. And once it's above 880, then 900 quite fast, right? Okay. I'm just going to put this on a different screen. All right. State Bank of India. Sort of no man's zone as far as support resistance goes. Wouldn't say this is a symmetrical triangle actually of much, but you can see the dojis and the long, not long, but relatively, shadows overwhelming the bodies. Markets taking its time to think about what it'll do. Watch out and then take a call on whether to go long or short. For a trader, good opportunity. For an investor, wait and watch. Sun Pharma going sideways. This level is, I think, very critical. So we'll just wait and watch that level. Does 800 break? Does it not break? Unlikely it's going to break this expiry. I would say sell the 900 call, and along with that maybe the 800 call also. Put. Tata Motors, this is very significant, breaking out of a downtrend, symmetrical or ascending triangle having been broken out. There we have it. So is the worst over for this stock? You had this decreasing volume and I would say a higher volume breakout, measuring implication 300 to 340. That's 40 bucks, 340 plus 340, 380. That's your next target. Excellent place to buy. As a matter of fact, very nice test of support, of a breakout, resistance being tested at support. Lots of short-term moving averages all clustered right in next to under it. And I would say Tata Motors is a star find. So let me just put it, 5-star long. Maybe valuations wise, it's also looking really good. Really surprising. We found a lot more long stocks than stocks to short. But this is not the first time it's happened. Same thing for Tata Motors DVR. All right. Both are in the FNO list, by the way. And this is Tata Power, definitely double tweezers bottom here. Low 55.20, this low 55.30, as good as it gets. And well, Power could be the buying place. By the way, there was this news about Tata Power starting the construction of the defense production unit in Karnataka. Last week I posted as on BIC Yahoo groups. I hope you had a look at it. And definitely at a multi-year low. That's there. And could be a good place to buy. Watch out for this 55 low, and once this 55, it has held so far. If traders could put a stop loss below 58, and once it clears 63, much more upside to be expected. Tata Steel, interesting. Tata Steel. So we've been talking about metals, and well, here you have it. Higher tops, higher bottoms, turnaround in the moving averages one by one. This is definitely looking more and more positive. Uh, and that was, yep, you could definitely say accumulation here. And oops, I'm not sure how we missed this, but let me go to weekly. Uh, won't really be able to see it that well, but so I hope you know what I'm thinking here. We actually had a very nice bullish divergence which somehow I totally missed. Okay, and you can see that also in the uh, stochastic, and I'm wondering whether we can see it in the RSI. Yes, you can. All right, so yep, this was there, and well, just missed it. So this is the bullish divergence now, showing up. Went to 200, and what a bounce from there. This low is 200.10. Somebody was definitely waiting there, and then from 200 to 240, that is a 20% move. Amazing, right? So that is really great. So psychological numbers doing their thing, and there you have it. All right. Yep. Today, big bullish candle, or rather bearish candle, but volumes are really low. And this is the other one, Tata Steel, big bullish divergence that has higher levels, most probably coming in Tata Steel. Right, so that's definitely to be bought on a correction. TCS, like we said last time, just going sideways, so really nothing much to say there. Tech Mahindra, oh, why is it slipping? I think it's wait and watch, do nothing. It's everything is going sideways. Probably write the 560, 580 call, and maybe the 500. No, don't write the 500 put. Maybe you should buy the 520, 500 put on Tech Mahindra. Ultratech we finished. Vedanta. Has definitely taken off. Once it clears 100, which it most likely will, it's going to just shoot up. Vedanta is definitely something to buy. All right, volumes, it's being bought, that's for sure. VEDL, buy, buy, buy is what I would say. Next target for VEDL, 180, sorry, 120. Yeah, there you have it, and that's where right now the 50-day moving average also is 120, 125 is what I would say. It's been terribly sold out from 450 to that, and basically it's come back to its 2008 lows and bounced off from that. Any correction on VDL in case it does come down to 90 or 85, definitely consider buying it. Wipro, ooh, sideways, sideways, sideways. TCS, Wipro, wonder what's going on in these extremely sideways stocks. Next quarterly results might disclose something. Who knows? And Yes Bank, that's bounced very nicely. So going from 880 to 630, lots of gaps, and now massive move midweek. Huge move. And then this is a flag forming. I would say definitely buy Yes Bank. 650 to 700, 700 to 750. That's the 200-day moving average. Yeah, right. 1 second. Yes Bank. So that could easily go to 750. You can put a stop loss below 690, I would say, and look at buying Yes Bank. Right. Z. Whoa! What a move! What a move on Z. Right. As right. Uh, it is all right. So here is where it is, 355. Sort of a tweezers bottom, moved up very nicely. Three bullish white soldiers. 385 good support, 380, 375. Any move down on Z should be used to buy, and it's probably heading back to make a new life high. Right. All right. Okay. And that's it, right? So actually this is quite interesting, very surprising that we found so many buying opportunities. Really only one good shorting opportunity is Coal India. Really have to now wonder whether what's happening in the underlying. We've got what, 1 2 3 4 5 6 7 8 9 10 buys, others of course sideways to neutral, but the high conviction ones were on the long side. So is the market actually going to take support and not going to fall much below say 77 or 75 at this point? Looks like that's very much the case. And like I said, till these events get done, there's really not much to look forward to. But in the meantime, these are definitely the stocks that you want to be concentrating on, right? Okay, so that's it. I think today's was nice, short and sweet, and we found some really good opportunities. Hope you make money in the coming week, and we will definitely be catching up next week. If there are any questions at this point, does anybody have anything, then please feel free to add it. I'll hold the recording till then. Right, so that's it for today. I'll be sending out this list by mail right now, and the recording hopefully should be up by tomorrow morning. Right, so have a great weekend and catch up with you again next week. Thank you and good night.